Morning, everybody. It is 8:10 a.m. It is November 4th. Welcome to my channel. Now, our markets are down, gapping down this morning. And they're gapping down, and it's kind of crazy. It's just basically over some Wall Street execs saying that the market is overvalued, which it is. I heard that it was at a record high valuation. And like Palantir had amazing earnings, right? But they were already at all-time highs. And so the market's just looking at it like it's an overvalued thing, which the overall market is. Now, what you have to consider here is how we just moved down was very, very straight down. Okay, in the overnight, very poor structure. That can get cleaned up very easily if this market rips back up today. Now, this market was pretty frothy, and we were kind of just, we had, what do we have? 4 daily down days in the market, right? The market really didn't go anywhere, but obviously when you open and you close lower than the open, that's a down day, right? So we finally now have some type of correction, right? Currently, the futures are down in the ES. Let's just see, S&P 500 around 1%, right? They were down more earlier. Now, in futures, we just hit the 20-day simple moving average in the ES. Usually, people are going to buy that, and you already have a wick there. Okay. In the Nasdaq, we finally went into that gap from that Sunday night gap open from a couple weeks ago. So, very interesting, right? We're finally into that gap, and I believe we're at last week's lows. I'd have to look at that again when we look. I'm just looking at the futures chart right now, and we finally went through. Now, here's the thing about futures: you don't count gap fills in the overnight sessions. It doesn't matter. All right. I can say that they're in the gap, but we're gapping down essentially into a gap. Okay. And what this could mean, right? Because generally the end of the year is bullish, right? Generally the end of the year is bullish. And the reason for that is earnings is just big earnings just went by. We still have some more earnings, right? And when earnings are done with some companies, their buyback windows open up. So then they can do buybacks, right? And I saw some stat, don't quote me on it, that a majority of the moves that the market moves up were due to buybacks with a lot of these big companies. Okay, so that's number one. Number two is right now a lot of fund managers and portfolio managers are underweight equities. And a lot of times that there's a rebalance that I was just listening to a podcast the other day. And if you want to listen to it, it's called Thoughtful Money. And every weekend, this guy, Lance Roberts, who's awesome, he has his own financial, I guess, investment company, right? RIA, right? He's awesome, right? So he lets you know basically that in December, you usually get a pullback in the beginning. That's a rebalance. And then that's where he said fund managers, portfolio, and stuff like that have to like then buy equities for the end of the year. That's why he says you usually get a Santa Claus rally. So will this be different? I don't know, right? I don't know. What we do know is the AI thing is just out of control. Amazon just partnered with OpenAI. And then the only thing I saw yesterday, which was interesting, is that like AWS, Amazon is selling NVIDIA chips to OpenAI. And then this is a negative for NVIDIA. I don't know how much in negative it is, but um, AWS is making their own chips. AWS, Amazon, and their OpenAI is using them, and they're cheaper, and they're doing the same job, right? Because eventually, right? People are gonna just make the same type of product Nvidia is, and it's gonna broaden the market share. It's just bound to happen. This is how it works. Does that mean Nvidia is a sell? No, I own Nvidia, but like, eventually, it's like bottle of water. I guess you could say bottled water. Everybody then had a bottled water, right? From the crisp mountain, you know, fresh spring water, right? So it's just an interesting time. It's an interesting time, right? Now, our market's taught to buy dips. Does this dip get bought? I don't know. If you have to go with the history of the last, I don't know, 10 years, it probably does. But I don't know, right? You never know. Nobody ever knows. Now, was the writing on the wall with this? What I was saying last week, that the overall breadth was not strong and tech was just holding up the market? Possibly. Possibly, right? I did just put some longs options in yesterday on. I put them on Salesforce and Boeing. They're holding up okay. They're holding up okay. So I'll monitor them, and if I see something, that they're spreads, they're bull call spreads or debit spreads. So the beauty of that is you have a built-in hedge that like it's not going to move that much. So if I take them off, it will be a small loss, but I'll watch because it's still, I'm going to watch them. Okay. So without further ado, let's just get into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. That is how I construct game plans and how I look at the market. Okay, use anchor view ups. All right, anchor that into a place and time, and then I'll see who's in control. Right, I use Bookmap to execute on futures, and I'm gonna tell you something right now, boy. I am getting frustrated, boy, because every day I'm like, ooh, I'd love to get a pullback here, and it doesn't pull back, and then the market goes where I thought it would. Very frustrating. Okay, use market internals. Okay, market internals to find out, hey, from the open, who's driving the market, right? What is the market capable of today? And then, of course, my weekly expected move indicator, which really came through last week. It showed everything was overdone. In the future, when I see that again, I'm going to short. I've seen it now, I think 3 times now with that indicator that you can get for free on my Discord. 3 times now where I've seen QQQ hit its expected move, and then 4 or 5 major Mag 7 stocks do the same thing. Usually you get a correction, and we're getting it right now. So the data is in that this is pretty much, I probably should just go short when I see that. Worth the risk, right? I keep seeing the same thing over and over again. Okay. Now, the one thing I am dipping my toes in, and I'm not going to share because I don't think it's productive, what I'm doing, I'm trading, is I'm actually trying out with my one good friend, Documents, who comes in here, the top step like funded futures program. I'm just trying it out. So I'm not trading my regular style on it. I'm more trying to be more of a scalper to pass the eval. It's just a 50K eval. It actually only costs 49 bucks. And trying it out. Right? Trying it out. Because I'm going to let you in on something, right? There's a lot of times where the way I'm trading now, it's very structured where I want to see a certain setup, and that's only when I get in, right? But they're overseeing markets for, I don't know, 6, almost 7 years or whatever. There's times where I'm like, there should be a pop here. We should do this now. We should do this now. And a lot of times it's like I'm a conductor of an orchestra. And it's like, well, that could have been a nice scalp. Oh, that could have been a nice scalp. Oh, if it comes down here, usually you see a pop. Oh, when it's probably only going to go to here. So yesterday, using that experience that I have, I did some scalps in the ES, and I don't know, made close to $455 or something for the eval. And then I just said, all right, cool. And that's just me doing one lot in the ES scalping. So I'm gonna see what that does for me, because that's a tool. I don't really like to trade like that for my regular personal account, but I want to see if I can make that a viable thing. Maybe that's a style I can do when I'm in this area where my setups aren't coming, right? But I still can read or tell usually what's going to happen in the next couple of minutes. So why not take advantage of it, right? So that's something I'm trying. All right. That's something I'm trying. All right. I think, well, before I do that, let's hopefully you join me every morning. All right, lately, I've been giving you a little summary before I do this, but hopefully you join me every morning and subscribe, set an alert. I hope I believe I do provide a good product here. I don't have a ton of people who watch. That's fine. Hopefully that grows. But I do believe I provide the economic calendar, what's going on in the markets, the latest news, why this is happening, what we need to look out for. I think it's pretty stellar. I would love to hear this if I had to sit back and just have a cup of coffee and I'm not maybe trading, but I want to know what's going on in the market. Why wouldn't I listen to me? And that's not being bragging. That's like, I really believe it. So subscribe, set an alert. You got nothing to lose. And I give you what's going on in the markets, right? I'm not going to lie to you, tell you I'm predicting things all the time. That's just a bunch of garbage. Okay? There's probabilities always in the markets. And then I'm always a scenario based trader. Okay? Scenario based. And a lot of times my analysis proves correct. And sometimes I don't even have the money to show for it. Right? So hopefully you sign up. Now, if you want more in depth coverage, you're going to join my Discord. That's Confluence Trading. Click on the homepage, sign up, click on the link, and join me. What do you get when you join the Discord? You get intraday commentary. Okay. Yesterday, I was pretty active. So you can see here from yesterday. And yesterday, this, you can check it out if you want. That sell off in the NASDAQ was my exact scenario, the first short scenario that I had. And now I'm going to have to figure out some type of setup with this because it's not the easiest thing to just trade the open. Okay. But I've mentioned this multiple times now where the overnight session is like 100% net, let's say in this case, net long. And you open up near the top of the overnight session and you have a real big push up from the prior session, it's really a good chance that you're going to have some type of correction. And that really happened. And I put a link here. It's bookmarked here. So if you play it, you'll see exactly what happened is what I said. Now, again, it's very hard to have a setup there because it's very volatile, the opens. I have to come up with some type of system for me in the future to see if I could take advantage of that. Okay. Then I just went on about the yesterday. We kind of dropped. Right. I said here in the NASDAQ, we had to hold underneath that level in order to, or we were going to go right back up. We kind of did go right back up. And, we hit the 9 EMA daily I was talking about. And then this morning I said this could be the correction the market needed. Right. So we have to see. All right. And then you have here, every weekend I've been doing this, giving you my plays that I'm looking at. So you see, I already put a trade on for Meta yesterday. Boeing, Salesforce, Costco, I'm eyeing up, and MicroStrategies. Right? So I'm eyeing up longs there, and I put trades on already. Now, didn't know this correction was going to happen. Right? But we just have to see. You don't always know. Right? You don't always know. All right? And here's the weekly expected move. Right there. Throw it on your charts. Got nothing to lose. Right? Basically what this does is puts up the range that's expected for this week from the options market. I run it in a Python script every Monday morning. So 70% of the time, the market closes within those ranges. That's a big edge to have. Okay? 70% of the time. All right? Now, let's move on. Let's get right into futures. Watch list. So, the VIX obviously is up. So, we should have some nice movement today. Volume's up as well. VIX is up 12.17%, up to a 19.26 VIX. Dollar is up. Ooh, okay. Dollar's up to 100. We haven't seen that in a while. Remember I said that dollar has been bottoming, right? So we'll get into that later. 30-year bonds are pretty much flat. 10-year yield is down 0.19. People are buying bonds. Gold's down under 4,000. Under 4,000, down 0.46. Dow is down 0.62. ES is down 1.10. Crude is down 1.38. Russell's down 1.40. Nasdaq's down 1.5, so almost 1.5% down in the Nasdaq. Silver's down 1.62. Ethereum is down 2.35, and Bitcoin is down to it's under 104. It's at 103, down right under 3%. Mag 7. Let's look at it. Berkshire Hathaway. They are the strongest, but they're down. Okay, so we're going to go to 1%ers here. Meta, down 1.12. Meta continues to fall. Broadcom, down 1.68. Amazon, down 1.87. Google, down 2.12. Nvidia, down 2.19, down to $202. Tesla, down 2.85. AMD reports earnings today after the close, down over 3%. Coinbase, down 3.15 with Bitcoin. Okay. AMD, I trimmed my position in my portfolios. I'm starting to do target weights in my portfolios just to make it less emotional. So I took some off at like 265 last week, which was nice. You never know. I thought the market was kind of frothy. I kind of trimmed my Apple, Walmart. I kind of trimmed a lot of positions in my portfolios. So we'll see. I think it's if anybody's doing their own portfolios, it's definitely easier mentally when you're just looking at target weights, because I could just go, oh, what do I have to do to make this back to? I think I made AMD to 5% of my portfolio target weight, and then judge my stocks like that, not about shares and emotions. So it's pretty good way to do it. Now, actually, my portfolio, I got rid of my PepsiCo. Made money on it, had covered calls on it, and I think there'll be a better opportunity with PepsiCo. I mean, right now it's up because the market's down, right? Stuff like PepsiCo, McDonald's is all going to be up a little bit because those are defensives, right? Costco, I'm looking at a long in Costco still. It's really moving now. I have alerts set, so I have to see. Okay, really liking that Costco. We'll have to see what transpires. Of course, if we get a big boom today, big buy, those probably will get sold off. All right. Now, down here, let's go to the 1%ers here. Salesforce down 1%. It's right at my, basically where I entered this trade yesterday, right at that key level. So I'll be watching that. Mining stock, down 1.45. Caterpillar down 1.51. United Healthcare has been going down lately, down 1.84. Qualcomm down 1.83. Here's another one I own, GE Vernova, down 2.32. And I would love to add to that position. Oracle down 2.76. So Oracle, I did have a trade that I got out of last week that is really starting to, it might eventually fill that gap. Okay, that's a very wild stock. Palantir beat earnings all around, but it was overvalued. That's why it's down. Uber also reported earnings. They're down 7.79%. Let's get into the granular list here. Let's see what's popping here. Who's up today? Spotify. Hims, I own Hims. They're up 2.28. Clorox reported earnings, up 2.16. That's it, folks. And we got laggards. Who's lagging today? Norwegian Cruise Lines, I believe they reported earnings as well. MPC, I believe that's petroleum. That's an oil stock. down 6.54. Oklo, that's the nuclear company that has no revenues, down 6.35, kind of almost like a very speculative stock. Shopify down 5.23. I believe they reported earnings. Vertiv, I own that. They are down 4.71. Carnival Cruise Lines, probably with the line of Norwegian Cruise Lines. IonQ Quantum Computing, they're taking a hit. Tilray, Wheatstock, Soundhound down 4.56. Ticker IR, that's Iris. I think it's called Iris Energy. Down 4.31 after that monster deal yesterday with Microsoft, I believe. CoreWeave, Hood. I was going to short Hood. That would have been a nice play, but I didn't. Lots down. All right, I'm not going to get into all that. Lots down. Moving on, sectors. Leader, no surprise here is Staples. Staples. Only up 0.11 though. And the really thing that you care about, energy down, doesn't really matter, doesn't move markets. Discretionary, down 1.08. That's your Amazon, your Tesla, your Home Depot. Technology is down 1.81. That is your Microsoft, your Apple, your Nvidia. Semiconductors down 2.35. So 2.35, your laggard semis, that's a risk off market generally. Okay, it's a risk off. Okay. Moving on to the economic calendar now. Today, Fed Bowman spoke already, 6:35. We have API crude and government shutdown, so we don't have any of these other numbers. All right, let's look at the juice. Is Trump doing anything today? White House press briefing with Levitt at 12. Hopefully I'm done. I don't see anything else here. So he says global equities faltered as investors digested underwhelming results from artificial intelligence bellwether Palantir. And fresh warnings from Wall Street executives about stretched valuations. That's why we're down. And then we had the ISM that was in contraction. Let's look at the earnings calendar for this week. So we had this morning Uber, Shopify, Spotify, Pfizer, BP, Norwegian Cruise Lines all reported before the open. After the close today, AMD, Arista, Supermicro Computers, Estera Labs, A-Lab, Beyond Meat, Marathon, let's see, Upstart, Pinterest. Now, before the open tomorrow, Novo Nordisk, that's that weight loss drug, Humana, health insurance, McDonald's, that's your consumer discretionary that people don't look at as a staple, but it is a discretionary. Unity Software. All right, that's it. And we'll get into the after the close tomorrow. Okay. Moving over back to some stock news. Let's look at it together. Palantir, stock slumped 7.4 on the concerns about its lofty valuation after record run-up. AMD stock fell 2.3 with the company set to report at their closing bell. Okay. Starbucks stock rose 0.3 after the coffee giant announced it had entered an agreement to form a joint venture with Boyu Capital to operate its retail business in China. Norwegian Cruise Line stock fell 8.7% after the cruise operator missed expectations. Uber stock fell 3.7% after the ride-hailing company offered soft earnings on guidance. Let's see here. Marriott stock gained 1.5 after the hotel operator posted a rise in their quarter. Ferrari stock rose 2.1 after the Italian luxury car manufacturer reiterated its recently raised full-year guidance. Harley Davidson stock fell 0.4 after the company's global motorcycle retail sales declined. All right. Capri Holdings stock rose 7.1 after the Michael Kors parent top revenue estimates. All right. Moving on. Norway Wealth Fund to vote against Musk's $1 trillion Tesla pay package. Here we go. This is what the executives had to say about our markets. This is why they're down. Goldman, Morgan Stanley CEOs warn of equity markets heading towards correction. Chief executives of Morgan Stanley and Goldman Sachs caution that global equity markets could be heading towards a correction, underscoring a growing concern that investor optimism has driven valuations to sky-high levels. This is why we're down. Okay? This is why we're down. So let's see if anything else is out here. It looks like Google and Walt Disney YouTube TV has proposed restoring Disney's ABC and ESPN networks in response to the entertainment giants who earlier requested to bring back ABC. So they're having problems there. Let's see. Hims and Hers Health, the company beat Wall Street estimates for third quarter revenue as the telehealth company added subscribers and expanded its personalized health care offerings. The company's subscriber base increased to 2.47 million, up 21% from the prior year. I like that. We know, let's see, anything else here? We already talked about Starbucks. One thing with Tesla, the company's China-made electric vehicle sales fell 9.9% to 61,497 units in October from a year earlier, reversing a 2.8% increase in September. Okay. Let's see here. Altria Group, Jefferies cuts target price to 47 from 50. Okay. Qualcomm, JP Morgan raises target price to 210 from 200. I'm liking that. I'm liking that a lot. I own Qualcomm. So reflecting stronger smartphone demand, higher Apple chip share in upcoming iPhones, and growing optimism around Qualcomm's new AI data center products and diversification beyond handsets. Woo! Look at companies reporting results. Wow. We already talked about that. We got corporate events here. Let's see, AMD there. Yep, 5 o'clock. 5 o'clock's the earnings call for AMD. All right. I think we're done here. All right, I think we're done. I think we go right over to the daily charts. All right, let's take a look at this together. Now, on the daily chart, obviously, we're in this balance area. I talked about it yesterday, right? We had this uptrend line, right? And we just had a down day, a down day, a down day, a down day. But, color of the candles don't really matter much. I mean, don't they matter because, obviously, if it's black in my case here, that just means the open was higher than the close, right? You close lower than the open. If it's a white candle, you're open and you close higher than the open. But it's really the shape of the candle for me and where it is in location. Other than that, it doesn't really mean much. Okay? So, where are we at now? So, yesterday was just a whatever day. We are at 675.45. 675.45. We are all the way down here. Right there. Look to the left. Right at the low of this candle. Right at the gap. See that? That's where we're at. Right there. Right at the low of that candle. Okay? Below the trend line. This little trend line. Right? Just get the 20-day simple moving average, 672.31. Let's look at futures. Let's look at those futures. Okay? There's your black candle in my case. Okay? And you notice what it hit. The 20-day simple moving average to the tick. Look at that. Woo, to the tick. That usually gets bought. Okay? That's what I'm saying, right? Now look at the gap from here to here. Right? Now, like I said, it doesn't matter in overnight trading. That doesn't matter because this is a gap we're in right now. We're gapping down right now. Large gaps are not easy to trade. Okay? Now you're going to have kind of a supply zone now that's formed here, right here. That will be like your daily supply zone now. Okay? If this market stays down here today. Okay, you could rip back up and then, whatever. Okay, so that's what we're looking at. Pretty nice move down, right? Because this was garbage. Look at these candles. Garbage candles. All right? That's why the market was not easy last week. All right, let's move on to the Qs. Look at the Qs. Just looking strong. Remember I said yesterday, look, we have not touched this gap or this gap. Well, how are we looking today? We are at 622.20. 622.20. We are all the way here. Below this low to candle in this gap. We're gapping into a gap. Okay. Now we are not, because we are not near this 20-day simple moving average. We'll look at futures. They're not there either. Okay. You can see a nice balanced range here. So anybody who is long up here is not happy. Okay. Now if we look at futures, that will give us the more clear picture, right? Now if you look at the structure of this is just in balance. Look at this. All right, let's look at this together. That's where the futures are. Look, you are right here with this day. See the gap in here? So that's why you need to always zoom out and really see where we are. Look, we're right at last week's lows, right here. It happens to be, I think, last month's highs as well. Maybe I'm wrong about that. No, that's last month's highs. So don't ignore what I just said. That's last week's lows. We're just at last week's lows. Put that in perspective. We're just at last week's lows. Okay? We're not at the 20. We're not even close to the 50. We didn't even touch this little gap here. Could it? Yeah, cool. But keep that in perspective. That's very important. Keep that in perspective. Okay? Because look, that's a balanced range, okay? That's why I'm saying this could just, people just could be loading up today. Could be really loading up today into the end of the year. This could be the pullback. Maybe we can get more downside. I'm not saying that, okay? All right, let's move on. And now let's look at that triple-headed monster. Let's look at it, folks. Let's look at the triple-headed monster. We're going to check out that dollar, because remember what I talked about, that dollar. That dollar is going to make a run. Is this the run? Remember, look how long it's been bottoming out. I mean, literally from, let's just call it from here. From June all the way, just bottoming. Tried to go lower, tried to go lower. And look, we went up one time to 100, sold off. Tried again to 99. Now look, can we go up to the 200-day? Okay, and if we start to really rock it, that would not be good for equities. Okay, a strong dollar is not good for equities, not good for commodities. Okay, now over to the 10-year yield. 10-year yield was going lower. Look at that downtrend. It just kind of broke the downtrend. Hit the 50-day. Now it still has swing high, swing high, swing high. It could still fall apart. But this, since Powell said, well, it's not a lock that we're making a cut in December, you got this jolt in yields, which means people, okay, are selling bonds. This is the inverse. This is the yields, okay? Now, we'll finish it off with the VIX. And we got a jolt in the VIX today. Gapping up here. So look at the VIX. But look, that was the first move when we made the move down in the markets. It all went up to a 20. We're down to a 19 now. Now, can it sustain this down here? I don't know. I don't know. Okay? So, is just about a dip. It might be. Okay. Now, what I've been doing lately is really quickly showing you guys our equal weight. So let's look at the equal weight. Yesterday, the equal weight had a nice recovery. Look at that wick in that equal weight yesterday. So the market opened here, went all the way down, and then ripped into the close. So that looks strong for equal weight. Hit the 100-day moving average. Okay. So the New York Stock Exchange did the same thing. Had a nice big wick. The Nasdaq Composite probably not going to look the same. Nope. Not going to look the same, right? So, and we'll finish it off. What else do I have in this list here? I think that's it. RSP. Oh, let's do the 50-day moving average. Look at the breadth here. Stocks above their 50-day moving average is only at 38%. So again, that just shows you 500 stocks, only 38% are above the 50-day moving average. That is not good. Okay? That's what I mean. This market's on shaky legs with all this AI. Okay? All right. Moving on. I think we're just going to go right into the daily charts. All right. I'm sorry, hourly charts. Let's do it. All right, this is your hourly charts. Let's get that volume back here. Okay. Look at that. We're at 154% of relative volume in the ES, 154% in the NASDAQ. That is very good volume, folks. Okay. Now, let's look at our charts together and see what's popping here. Now, this is your ES. So the ES already filled this gap right here. Okay? It already did that. Now, this gap was unfilled. Right? This is all overnight. That shaded, the lightly shaded area is overnight activity. So, look what we did. Right? We came into this demand zone, we popped out. Okay? Look at this little consolidation here. That's what held us. And you have a high volume node here. You can see it. See that? So, high volume nodes attract, they're like magnets, and they usually stop the market, which they did. But this is a gap again, right here. This is a gap. Okay? Look at that. Unbelievable. It got bought right at the bottom of that gap. Now, that gap does not count as filled because this is overnight. That doesn't matter. You need to fill it in real-time trading hours in the black, in the shaded area. Okay? The black area is the real-time trading hours. Okay, now look at this drop. That is not good structure. What I'm saying is, if we get any momentum like this, this can get cleaned right back up. And if we take this out, it's all-time highs into Christmas. Okay? Now, if we did this, move sideways, 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 down, sideways, 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 down, sideways, 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 down, that is proper movement down. That would be hard to cut through, to cut through, to cut through. This does not make it very hard to cut through. Now, again, I don't know what's going to happen today. I'm just pointing that out. Okay? I'm pointing it out. This is last week's lows. We are well below that in the ES. Okay? I believe this is last month's lows right here. I could be wrong, or last month's. I believe that is. Okay? So, what are we going to look for today? Do we fill this gap? Right? To me, because of this poor structure, and if you get any strength in tech today, like people going, oh, I'm buying this for Santa Claus. Maybe that happens, right? You can't take this low out. Let's say you become close, higher low, break this here, and then pull back. Woo! The reason why I say that is because you got a high volume node here. It's the most traded price of the rolling month is right here, right there. It's going to take a lot to push through that. When I say it takes a lot, that's what usually happens. If this market cuts through that, retests that, there my foot, that's a real correction happening. Okay? That's how you play these levels. When I say, hey, I do the most traded price of the year, the month, the week, and the previous day, that's where these come into play. Okay? Now, look at NASDAQ. And the NASDAQ has a different structure. It has a different structure. Okay, let's back it out. Notice, not the best structure down. And where did you leave the most traded price of the week? 261s. Most traded price of yesterday. No surprise, we broke these lows. And look, we never, ever have touched this gap yet. Well, now we're in it. We're gapping down into a gap. And where did we hit? Last week's lows. Right here. Okay? Gap into a gap. So this becomes interesting. Okay? Now that I'm looking at this. This becomes interesting. Because you don't have a high volume node below here to stop the NASDAQ. You don't. You're gapping into a gap. Okay? So if the market gets really like panicky, there's nothing stopping this market from going all the way down in 253s. That's the next gap. This is one gap. This is the next gap. And we're gapping into a gap. You don't have volume. Notice this composite volume node has no volume here. Not a lot here. And then you have finally some volume here. Okay. So that, and again, when I always say that, the high volume nodes, I create a game plan. There's not volume here, folks. There's not much holding the NASDAQ here. Now, I don't know why I'm not seeing the most traded price of the rolling month. That's just how much we just moved. Hold on. There it is. Wow. The most traded price of the month is still down here at 249s. That just shows you how much. Look at that. This is why, right? Look at the price action. I'm like, wow, that hasn't moved up. Well, look at it. Ripped up, gapped up, ripped up, ripped up. That's the movement. That's why the most traded price of the month is all the way down here. Value for the month is all the way down at 249s. And you don't have any volume until 253s. So this can really fall. Now, like I just said, it can really fall, right? Well, there's also the bullish case here. Okay, this is last week's lows. This is your low, right? You took out this low. Now, this tried to come down to the last week's and got bought. We're in it, gapping into a gap. If this market does this, breaks basically the 258s, right? And pulls back, and the market is not weak, and it's firing on all cylinders, this is going to get cleaned up. And we're going to go right back to value 261s. And if you gap into a gap and hold it, that's just showing you the market momentum is to the upside. And you have to be trading low. Okay? All right. Let's get out of these hourlies. That's your hourlies, folks. All right, folks. Let's move on to the market profile, volume profile. That's your technical. I'm going to give you your long and short trade scenarios right now. Hopefully everyone's awake still, or if you're still here. All right, let's look at this together. Let's look at that rolling profile. Ooh, we got a balanced profile. Look at this profile. We now have excess. We now have value, and we now have excess. That's a bell curve. When you see that, generally, that means the auction is complete. Normally, that means the auction is complete. Okay, that's a balanced auction. The market needs to build out some volume here. Okay, if it can't, the market's going to make the price go back to the mean. That's how it works. Okay, now we have some key levels. I'm looking right at my face. Right at my face. 6909s. That is what I call a confluence high. Okay, you have overnight session, RTH session, equal highs. That's a breakout point. Okay, now the next point. Look where we opened up in just the reverse of yesterday. Check this out. Okay, big edge here. You got your most traded price of the week. The 60, what is it? The 68.85s. Okay. Look where the open happened in the overnights. So right here is a key level. That's your close. That's your overnight high. That's your most traded price of the week and the most traded price of yesterday and the 50% Fibonacci of yesterday's session. Big, big level. Okay. Now, this is the key. And we're doing the same thing as yesterday. The overnight session is 100% net short. 100% net short. There is no long from the open. Everything is short. Look at the thin volume here. That's very thin. Okay, now we do have an overnight VPOC right here. Let's just call it 68.13s. Okay, we are building some volume here. Okay, so where's our gap fill? 68.49s. Gap fill lines up with last week's lows. That's a key level as well. Another key level is the overnight 50% retracement, 68.36. Now these big gaps are not easy to trade at all. I know they are not. They are not easy. Okay, at all. Okay, I have to say that for myself. All right, now remember what I was showing you guys on the last chart. See this big volume here? This is demand in a high volume node from the past, right? And almost the most traded price, the 67.75, let's call it, is your most traded price of the month. That's the monthly value. We almost came back and said hello into the warm, snuggly bed of the most traded price of the rolling month. Okay? Very interesting, right? So, another level is right here. Let's get that exact number. The overnight VPOC is 68.15. 68.15. So let's put a little range here. Price is here, okay? This is the roadmap for today. Do we go up here? Probably not. I don't know. Okay? So how do we look at this and construct scenarios? Remember, I do this live with you guys every day. Let's do it. Let's do it. Let's break this out. Okay? Let's break this out. That's our session. It's only 30-minute bars. Look at this free fall. Woohoo! Six, 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 six. Oh, you're calling it? We're tanking? Colerion. Is that your call? Obviously, that's SPY, right? Now, let's look at this, all right? Let's look at this. We're going to go, I'm going to go with the bull side first. Not because I think it's bullish, but we're in the levels that I would want to be interested in, okay? So, we're going to talk about the bear trap. Now, if you don't know, around 67.80, 67.70 is the most traded price of the rolling month, and there's a lot of trading there. If you don't know that, you got to be careful there, because Colerion, right, is thinking we're dropping. Okay. Now I know what I've seen for the last 7 years is you do not cut through these at all. It just doesn't happen unless there's a COVID. Okay. I know that. If you don't have that on your chart and you don't know that, you think we're just going down, right? But you use it as market generated information. Okay. You use it as market generated information. If the market sliced through that, that's telling you people are panicking. I will look at that and go, all right, maybe Colerion has got something now, right? But until I see how the market reacts to this level, I'm open. I don't care to be right or wrong. Okay? I use these levels to show me, hey, market, show me what you do at this level. Right? So if we're bullish here, I'm going to look for a couple things. Okay? I'm going to look to take out the overnight lows. And there's demand here. Okay? We've got demand, the most traded price of the rolling month. How does the market react to this level if we take out the overnight low? Okay? From 67.80 to 67.70, if it goes into this area, okay, that will tell me, okay, sellers are in here or not. If we do this, that does not mean anything to me yet, right? That is not acceptance. If we do this, whoop, and we retest, and that market is not weak, okay? If you don't have market internals from the open, you will not know this. You won't know it if you don't have internals. Okay, that's why I have internals. I'm looking at everything off the open. I want to see what's strong from the open, not from yesterday's close, from the open. Okay, so if the market is, oh man, this market's not even weak, right? This can rip. And where can it rip to? Right to that 68.15, the overnight VPOC. Okay, that would be a friggin' monster trade. Now that doesn't mean we can't roll over, but that just means that maybe the first test of that level gets bought. Now, that's one, right? Now, this might not happen. Okay. Now I'm going to show you this one trade in particular what can happen. Let's say we break up through that overnight VPOC. You can retest it. And guess what? Look at this thin volume. Now you want to see Elfie in reverse, right? Elephant on a toothpick. This is elephant on a toothpick reversed. This is poor structure. That thin volume is not good resistance. Okay? So what could happen is you can just start ripping back up to value. This is where we get the pullback everybody was waiting for Santa Claus and the reindeer. Okay? Again, I'm not predicting that. I want to get that clear. This is a scenario. So here's the next scenario. Let's say we try to move down, we don't. We push up through the overnight VPOC, 68.15. Hold it, rock it. It could rocket right up, fill that gap. Boom, and that could be the trade. That's all I am looking at. Okay? Now, we go to the shorts. What am I looking at? Well, price is here, right? Overnight lows are here. We're gapping into a gap. We know we have the 67.80 to 67.70 as your most traded price of the rolling month. Okay, so what I like to see. Now remember I mentioned this thin volume, right? I mentioned the thin volume. Well, let's say we push up. Now this could be a very well scenario as well. Let me get rid of that. Let me show you something. We obviously can just gap and go. And we could head right to this level. Guess what I would do? I would take it off. Right there. I would take some off. Because then the market's going to tell me, if we just ripped and said buy, most traded price of the month, that is super bearish. That is very well a scenario. Do I think that happens like that? I don't think it's the most likely, but you have to put it there. Okay? Second, what can we do? We can come up past that 68.15, the most traded price of the overnight, but then fail, retest it, and then you go and dump back. That is a good trade. Here's the one that will be difficult, but it's also feasible, is you push up, right? You push up into that thin volume and you fill that gap right there. And then you have supply here, right? You just fail. Whoop. Lower high. And guess what? We probably go back into this range here. And that's the range for the day. I don't think we roll over. Okay? Again, these gaps, these large gaps, are not easy to trade at all. They're not easy. That is your ES. Let's go over to the NASDAQ. Okay. All right. We got a very balanced profile again. Okay. Very balanced. Look at that. Look at that profile. That is a bell curve, boy. What is the market's job? It needs to start building out volume down here. If it can't, you go back to value, the 261s. Okay? If it cannot do it, it will go back to value. We also are 100% net short in this as well. Okay? So you got big level here, right here. Your 261s. That's your close. That's your most traded price of yesterday, your most traded price of the week. You're 100% net short, and you're at the bottom of the session. Now let me move this up, because I really want to give you guys the good levels here. Okay. Right there. All right. So let's do this again. That's your overnight highs, your most traded price of yesterday, your most traded price of the week. Right here. Overnight high. Your gap fill is 261.2 right here. All right, you got a supply zone here. You got your 50% Fibonacci of this overnight is 25886 right there. Your price is down here. So the NASDAQ is relatively weaker in the where it is in the session of the overnight. We're gapping into a gap. We're right at last week's lows. This is the trickier one. This is where Cole Rion, or I'm just going to call you Cole Rion. I know you told me that I said, I don't remember. I don't even know if you're still there. Okay, but this is where it could get really nasty. This is where it could get really nasty for the NASDAQ. Okay. Now, we're going to put Cole. I'll call you Cole. All right. So, Cole, that is the last week's lows. I'm going to put a little range right there. Overnight lows, last week's lows. Okay. We also have the overnight VPOC here, 25763s. We're going to put that here. We're gapping into a gap. This is not easy, folks. Gapping into a gap. Ugh. Right? But this is what we have, right? You have the bottom of the gap here. This is where it gets real nasty for the NASDAQ, okay? because I just explained it to you guys. There is not a lot of volume all the way down to the 253s. This is really, there's not a lot of support here. You got a gap and a little bit of volume here. This is really, doesn't look good. Okay? If you're looking for support here, look, I don't even have a demand zone here. Notice that? It can get really ugly. Okay? So, we are going to start with scenarios. All right, and we're going to start with the bull case. But like I said, the bear case looks can get really nasty. All right? Real nasty. All right, let's break this out, the session out. Now we're 100% net short at the bottom. That's an edge for some type of correction to the upside. Remember, I kept mentioning that, okay? 100% net short and thin volume. Okay? Price is here. What could I see? Now, you could gap and go. This would be the bear trap. But gap and go. Hit the bottom of that gap. Now, if you get a nice push off that and you get a higher low, you could just target your 25763. The most traded price of the overnights. Okay? And you do have the top of this gap right there. If you do this and you put a higher low in, this could rocket. Look at that thin volume. And this market is strong in tech, and they're like, we're buying this dip. Woo! You go up, and you can go back to value at 261. That could be a crazy day. And be like, wow, that was just erased. Because the reason this is going down is because Wall Street execs said that the market's overvalued. And we had some contraction in the ISM. There's really, that's it. Okay? All right, now we just made valuations lower, right? So that's what I'm saying. This isn't like COVID or something. Now, that's the bear trap. Okay? We can also just go whoop, power through this resistance here, hold, pull back to the 25763s, rip through that thin volume. My boy Elfie here, that reverse Elfie. Okay? I am not interested in anything other than these scenarios for a long. Now, maybe something else may transpire, but right now, that's all I'd be interested in. A little bear trap or push up, retain the overnight VPOC, and you lift through this thin volume. Moving on to the shorts, to the coal. Right? Now, we know we have a lot of volume here, right? First thing, okay, you could gap and go. Boom, fill that gap. Uh-oh, don't have much volume here. And this could just rip. Go back into this gap, fill that gap around the 253s. That is very viable for this NASDAQ. And guess what? Your ES would follow suit. So this is very important to track what the NASDAQ does. You do not have much support. It could just get ripped to shreds. And of course, if the market's weak, this will be panic city. Okay? That is not an easy trade. Okay? Second one. We get that push up, right? Oh, we break this resistance, but then come through the most traded price, the 25763s, retest it. We can go fill that gap, and depends how weak the market is, start to go towards that second gap. Okay. Now the trickier one, which probably I'm not maybe interested in as much, is if we push up into this thin volume, thin, we fill that gap right here. That's probably going to cause profit taking. You get a lower high, and then maybe we go back down into this range, and that's it. We just balance. Okay? That's it, folks. That's all the analysis for today. I hope you enjoyed that analysis. Smash that like button if you did. That'd be much appreciated. Now, as always, hopefully you guys can join me every morning. Do this every day. Give you the market story, the market news, the economic calendar. Just give you long and short trade scenarios in the ES and the Nasdaq futures. Okay, now we have a plan. Now, sometimes equities, stocks, are easier to trade in these big gaps. Individual stocks are usually easier. Okay, I'm going to be real cautious today because I know big gaps are very hard to trade. Now, I told you I'm using top step. Fund it, I might scalp it. Okay, I might see, oh, this could be and I might just be this could run. I get in it, I'm at break even, and then I don't care. Okay, I'm not gonna lie, this could be scalper's paradise today because there's gonna be a lot of volatility. Okay, so if you want to hear what I have to say today, you're gonna join my Discord, Confluence Trading. Go to the YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Also, get my indicator, the weekly expected move. Put it on your charts on Thinkorswim and on your phone. All right? Now, everybody, if I don't see you in my Discord, I will see you tomorrow morning. So have a great day. Remember, no trade's a trade. Hopefully, everybody is green today.